Kick it off.
You bet. So this is called Choose Your Own Adventure. It's the 15th annual survey. It's been done in the course of 3 different firms. And it's simply modeled after the children's series from the 1970s that, interestingly, was rejected by hundreds of publishers and ended up being one of the best-selling in all children's history in multiple languages. Let's look at the scenarios. First chart. This is a chart of the S&P 500 as it stands right now. And respondents were given a choice of 5 scenarios. So the first scenario, and you see that here, now we go to the next chart, is Odyssey number 1. And what this calls for is essentially a little bit of weakness here in October, and then off to the races essentially in November and December, ending at around 4,900. Now, the truth is this one's already kind of out the window because we've had more weakness than this would allow. Look at Odyssey number 2. This was also a popular pick, about 400 respondents. This calls for weakness, which we are seeing right now in October, but then a strong rebound in November and a good, strong seasonal December ending around 4,700. Also a very popular choice. The third, and to some extent this is out, so Odyssey number 3, where we're kind of flattish. We eke out slight new gains, but December's not really all that good. We end up a little bit higher than where we are now. And to some extent, there's no swoon in this scenario, so this is already not the trajectory the market's likely to travel. Odyssey number 4. Now take a look. This is the seasonal weakness, and to some extent we're seeing this now. Now that swoon is down as 3,700, and we don't ever really recover, and we end the year 4,300. And the fifth, and also a popular choice among the respondents, was that we do have a seasonal swoon, which we're seeing now, but that we get a seasonal recovery in December, often a very strong month, and we climb back and undo a lot of the damage that we've seen in the October period.
So, Carter, I know the game is Choose Your Own Adventure, and the game is to pick where the S&P 500 will end the year. But within this, is there sort of a linchpin sector and sector performance that, in your view, sort of governs which path is more likely?
Well, of course, it is just by virtue of the weighting in the super cap growth names and others. I mean, if and as you get more meaningful selling in Apple and Microsoft, Google and Amazon, and Netflix and Facebook, and et cetera and so forth, that takes the market down mathematically. My own hunch is that we will stop for a bit at the 150-day moving average, which is about 3% from here.
Okay. Carter, thank you. Carter Braxton Worth of Carter Braxton Worth Charting. It is time now for the traders to choose their own adventure. So, Guy, which Odyssey speaks to you?
Well, I truly hope I did this correctly, Mel. I had the information and I had the instructions in my ear. You'll see I did 05 because I don't know how to spell Odyssey, and that's up 18.6%. It's sort of in line with what I said during the 5 o'clock show, where I anticipated a bit of a sell-off in the S&P down to 4,100, only to find its footing and rally in the back half of the year. So that would be my selection.
Yeah. Bonawyn, how about you?
Well, one of us didn't do it right. So 21.1% is where I'm at. I do think that there's a bit more volatility rather than it being straight up and to the right.
Okay, so Bonawyn chose Odyssey number 3. There's a lot to follow along here with the 5 Odysseys. I know it's tough. Tim Seymour, what do you say?
Well, I did it right. I chose Space Oddity number 3, but Bonawyn hit the right number, which is 21.1%, which is effectively where we were before we just started the sell-off. I think we'll probably trade down to 4,200, and then I think we will ultimately rally back about 7%. It will feel pretty good by the end of the year, and I think we have big problems in the first quarter. But I do think we're going to get back to those old highs, and I think we will stall, which means I think we have a little bit more to go to the downside.